Homeowners insurance explained to beginners. Purchasing a home is a huge investment, no question about it. To protect that investment, a homeowner buys coverage against sudden and accidental damage to the property, along with everything inside it. Keep in mind that homeowners insurance also protects against damage to the additional structures on the covered property. In this video, we shed light on everything you need to know about homeowners insurance using everyday English. Welcome back, folks, to another edition of Sweetie Kiwi. How are you doing today? I hope you are doing fantastic. Me, I'm doing fantastic. I'm doing marvelous. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Let's roll. Today, I want to talk about homeowners insurance and explain everything in everyday English. What is the definition of homeowners insurance? Home insurance is the same thing as homeowners insurance, by the way. It is a personal property insurance contract between you and an insurance company that protects your investment in your home as well as your personal liability. So you pay an agreed upon amount of money, that's called a premium, to the insurance company in exchange for protection against the cost of disasters and accidental loss or damage to your home, premises, and anything on the property. Home insurance also provides liability coverage to you and family members living in the home. So a homeowner's insurance package combines all of the above elements to protect you from unexpected financial hardship by providing you with compensation when a qualifying insurance claim occurs. Now, there are two things I want to talk a little bit more about. You have a qualifying insurance claim and you have unexpected financial hardships. Those are the two elements that make homeowners insurance, as every type of insurance, a risk mitigation tool. Risk mitigation means that you are putting in place a system whereby if something were to happen, something adverse to you, something detrimental, something negative to you, unfavorable to you were to happen, you will not lose a lot of money. So you have insurance will step in and insurance will pay for it. Now, home insurance is an optional coverage. It is not required by law. But if you have a mortgage on your home, a bank or lender may require you to have home insurance to protect the loan. Let me go back to what I was saying earlier about a qualified insurance claim and financial hardship. What is a financial hardship? Financial hardship is if you have an accident or a disaster and you have a huge damage to your house. Let's say the damage comes to, you have to pay $100,000 and you don't have the money, then you are basically you will be in a very difficult financial situation. So the insurance will step in and will pay for the damage as long as you pay for the deductible. Now, the second part is a qualified insurance claim. In other words, when you have a homeowner's insurance policy statement, there are events, there are incidents that the insurance company has listed, and those specific events and incidents are those that the insurance company promises to compensate you for. So if you have an event that is not on that list, if something happens, let's say I don't know, something weird or whatever that was not listed on that schedule of qualifying events, the insurance company might not pay you, might not compensate you. So it is important that for you to file a claim, you need to have a qualifying insurance claim. How does home insurance work? Let's just dig a little further here. Home insurance gives you protection against disasters and accidents by providing you with financial compensation to repair, replace, or rebuild items in your home or the building itself when the unexpected happens. Home insurance does not cover home maintenance or the regular wear and tear. However, if someone gets injured on your property, or if you injure someone or cause damage to someone else's property and are held liable, home insurance will provide coverage, including cost of legal representation to defend you. Let's take an example. Let's say that Jane gets home from work to discover that there is water all over her hallway. She realizes it is coming from the bathroom sink where a pipe suddenly burst. So what does she do? She will call the home insurance company for help, and they send someone over. The insurance company representative assesses the damage and understands it was not the result of poor maintenance. So Jane is worried about how much this will cost, but because she has a good home insurance policy, the insurance company will pay for the cost of cleaning up the mess, drying up the area, trying to rescue any salvageable items, and replacing the damaged personal property that got wet, as well as replacing the floors. Think about it, folks. If Jane didn't have, if she didn't have the insurance, think about how many thousands of dollars she would have to spend out of her own pocket to do all those replacement and renovation and everything else. So if Jane cannot live in her home while the insurance company is taking care of the renovation process, guess what? The home insurance policy will also cover Jane's additional living expenses while the home is being fixed. So ultimately, I mean, at the end of the day, Jane only pays her insurance deductible, and the rest of the damage from the water is repaired and paid for by the insurance. This is marvelous if you think about it, especially in a hard time when a policyholder doesn't have the money and the insurance company will step in and take care of everything. That's just fantastic. The process is similar to what you have in a car. Let's say if your car is insured and you, God forbid, you got involved in an accident, while the car is in the body shop for repair, the insurance company will pay for rental car up to 30 days. Some policies may go all the way to 60 days, but I've seen policies that were as low as 10 days. So they want you to have a rental car for 10 days, and after that you have to, what they do is they're trying to put pressure also on the garage, the body shop, to finish the repairs fast. Let's talk about the types of home insurance, because the types of home insurance you have will affect the claims process, will affect the amount that the insurance company will pay, also the payout, the payout, the settlements, if you will. There are many types of home insurance to choose from. Although insurance companies may brand homeowner policies with fancy policy form names or add additional coverages to offer more competitive products, all home insurance policies will be built on Standard Insurance Services Office policy forms, ISO. This include the following. So you have HO1. So this is a basic form policy. This is the most basic out there right now, at least in the United States. So the HO offers the most basic of coverage, covering only 10 named perils. This is another name for the qualifying incidents on both the buildings and content. Then you have HO-2. This form is a broader version of HO1, covering more than the 10 basic named perils. And then you have HO number 3. This is the standard home insurance policy. It provides an affordable way to have all risk coverage on your building while maintaining coverage, at least on a limited basis, on the movable items in your home. I mean, your personal belongings in this case. So those items are covered for 16 named perils. And then you have HO number 5, HO-5. This is more comprehensive, at least it's way more comprehensive than HO-1. It is a comprehensive policy that offers all risk coverage on both the building and contents. In other words, your personal belongings as well as medical payments coverage. So this type of policy offers the best protection. Of course, it is more expensive too, though. And you have HO-8. So this is known as the homeowner's modified form, the HO-8. So it offers minimal coverage and is often used for older homes where the market value of the home may be less than the cost of reconstruction, or where the materials used in the construction of the home are of quality that cannot easily be found in modern times. So the bottom line here is that home insurance is just one type of personal property insurance. There are also other specialized insurance policies for other types of property owners, such as you have mobile home insurance, condo insurance, and renters insurance. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi, another section of the Sweetie Kiwi Show. We are still continuing our conversation around home insurance. And I just wanted to tell you that home insurance covers a lot of stuff. And I've said before, it covers the premises, but also covers the structures. Now I want to go a little deeper into that aspect of things. By the way, if you love the content's clarity and quality so far, please consider subscribing to our channel and turn on the notification bell. We will surely appreciate that. And if you want to comment, you want to share, you want to like this content, we will really appreciate that as well. We drop this kind of content every single day, rain or shine. Home insurance is a package that covers 5 basic things. The amount of coverage for each of these will be found on the declaration page of your insurance policy, the DEC page. So you have the structure of your home, that's number 1. The additional structures on the property, 2. Additional living expenses, 3. Personal property, 4. And number 5, liability. So depending on the policy you choose, your personal property and building will be covered for all risk. I'm talking about open perils or named perils. All risk or open perils covers you for all risk, things that can go wrong and that cause a claim, as long as they are not excluded in the policy wording. So named perils cover you only for risks that are specifically mentioned in the policy wording, such as fire, smoke, explosion, or theft. Another thing I want to mention here is that the home insurance policy contract will define the basis of claim settlement. This is how you know how much you will get paid in a claim. So the most common options are the actual cash value or replacement cost, the ACV or the RC. So this makes a significant difference in how much money you get paid in a claim. We just finished another show on ACV versus the RC. You might want to double check that. We explain very well the kind of stuff, the kind of distinction you have between ACV and replacement cost. Insurance terms can be misleading. For example, actual cash value may sound pretty good, but it really only covers depreciated value, which is not enough to replace what you lost. So always ask for example of how a claim will be paid to make sure you understand what you are paying for and what you will get. Because this is really what matters, right? Insurance is about risk mitigation, and the last thing you want is when you really need the money, that's when the insurance company is telling you, hey, listen, we believe that the actual cash value is 5,000 or 10,000 less than the actual value of the actual amount that you were expecting in the first place. So you want to do your homework beforehand and make sure that whatever you sign is in sync with what you really need, with the kind of service you need. I want to talk now about the fact that there may also be extra coverage you can add to your policy with insurance riders or endorsements. So the riders, quote unquote riders, are just riders spells RIDER. So an insurance rider is just an add-on if you think about it. So some common endorsement to consider are water backup, wind and hail, earthquake, jewelry or other riders, ordnance or law coverage, flood insurance, and home business. Home business is pretty cool for people who are working from home, freelancers and other professionals who are conducting business right from their living room or bedroom. It's kind of important to have additional insurance. Now, why am I talking about do you really need home insurance? If you're like many people, your home is one of your greatest assets. Homeowners insurance is a good idea to help prevent having to pay out sudden expenses if there is a disaster. And God knows that this life is not a free journey, it's not a smooth journey. Sometimes stuff happens. So what if stuff happens, something adverse, something detrimental to you happen, and you have no money to cover it, to pay for it. So unless you have a significant emergency fund you will be willing to spend to repair or replace damage yourself, you need home insurance to protect your residence and give you peace of mind. With home insurance, if something bad happens, as I said earlier, like a fire, you will not find yourself on the streets. Homeowners insurance also protects your assets by providing you with liability coverage, which is an extra benefit here. Finally, home insurance is also a good protection for your personal belongings. So if you're ever a victim of theft or burglary, in your home insurance will help you replace what you have lost. Although, and this is a big although here, home insurance is not required by law. You need home insurance if you have a mortgage or loan on your home because the lender will require it. Remember, the lender is trying to protect his or her investments. So, similar to what they have with cars, if you buy a car on a loan, the lender will want you to have the title and the insurance on the car. So it's the same thing with homes. So if stuff happens, at least they're covered. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're also having a conversation here around home insurance, and I'm just walking you through all the important elements in home insurance, what you need to know. And you need to choose home insurance that fits your lifestyle and needs. And how do you do that? You want to choose a policy that fits your lifestyle. So home insurers can tailor their offerings to your needs. Insurance companies are just like other businesses, right? They have to come up with points of differentiation and will evolve by adding more options to the policy basics. To understand, you want to simply ask your insurance rep why the insurance they're quoting you is superior to their competitors. He or she might not be able to answer you, but if you're dealing with a captive insurance agent who works for a company, you may be at a disadvantage because he or she may not have this information at hand. Shopping for insurance through an independent agent who can compare various insurance companies will give you the best advantage. Now, nowadays, you don't even have to go to an independent agent. You have tools on the internet. You have a lot of tools. There's a lot of tools out there, and all you have to do is just to put your location or the location of the home and put your personal information, and the system will give you some kind of estimate. So you can actually shop around and make sure that you are choosing something that fits your lifestyle and your budget. You want to be sure to ask a few questions when you are shopping for insurance. And let me give them to you here. Number one, very important question you need to ask. Do you have coverage for items that are misplaced or disappears? In other words, does coverage apply if an item is misplaced or disappears? What happens if your home is underinsured? Is there a cap payout? What happens if after a claim the bylaws have changed and this increases the cost of rebuilding? How does the policy handle claims payments for items like antiques or fine arts? Is there a waiver of deductible if the loss reaches a certain amount? Does the policy contain certain coverages that are not subject to a deductible? Waivers of deductible can be very beneficial. So having your deductible waived if a claim reaches a certain value can save you thousands of dollars here, folks. And how does your policy cover various forms of water damage? A question like water damage is kind of critical because it's sometimes is linked to the lifestyle of the owner. So lifestyle issues also come into play when you want to choose a homeowner's insurance policy. Do you have small children at home or college-aged kids? Do you have parents in a nursing home? Do you have pets? Do you travel often? So you might not at first see the connection between buying a home insurance and your lifestyle, but there are limits or special features that could work to your advantage by exploring these questions. If incorporated into your policy, it may save you from having to spend more money on additional coverage elsewhere. And we've seen it in the country, especially on the West Coast, that some high-end home insurance policies will have higher limits for contents off premise or temporarily removed. And this could save you, if you are in that case, money on travel insurance. What about home insurance special limits? Special limits are sometimes you see them in policies across the country. You also see them in Canada, by the way. A special limits is a clause within your insurance policy that specifies areas where the coverage will be limited in the event of loss. If any of these special limits are relevant to you, you can ask to add coverage through a rider or endorsement. Here is a checklist of items that typically have special limits or exclusions associated with them. You have money, securities, trailers, watercraft, jewelry, collections and collectibles, antiques, furs, wine, fine arts, silverware, sporting equipment, bicycles, firearms, landscaping, swimming pools, electronic data restoration, business property. Keep in mind though, there may be other things your policy limits, which is why a discussion with an agent and a written explanation are recommended before you make any home insurance purchase. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are still having a conversation here around homeowners insurance, and I'm explaining this to you in simple English. How much home insurance costs? Now, the cost of home insurance will be based on myriad factors. The main factor will be the cost of reconstruction of your home, where your home is located, and what the loss experience is in the area where you live. For example, if you live in an area with a lot of crime, or say a high incidence of storms or water damage, rates may be higher than in areas where life is cooler, where life is smoother, there is less crime or less incident of severe weather. Since home insurance also covers your personal belongings, yeah, right, I've said that before, because it covers everything around the property, but also inside. So the amount of coverage you need impacts the cost of your policy. So your personal information and insurability score are also used to determine the cost of home insurance. This may include your past insurance history and your credit rating and other information that you may need to show as long as information that may grant you discounts on the price. The most recent data from the Insurance Information Institute, the III, found that the average cost of home insurance in 2020 was $1,325. However, this average varies by states, ranging from $702 per year in Oregon to $2,059 in Louisiana. We're showing here now on the screen. Here is a small map of a small table rather of the top states with lowest and highest average cost of home insurance. So you can see that the first is Louisiana when it comes to the highest average cost, and the lowest is Oregon. And in between you have Utah, Idaho, Nevada, Wisconsin, Florida, Texas, Oklahoma, and Kansas. So when shopping for homeowners insurance, ask companies how you can save money through discounts. This could mean bundling your other insurance policies, like for your car, with your home insurance. So if you want to bundle your homeowners insurance with your car insurance, with your medical insurance, that's even better. That way you can save money. How claims get paid. How a claim gets paid is called the basis of claims settlements. There are three types of claims settlements. You have actual cash value, replacement cost, and the third one is replacement cost with no obligation to replace, often referred to as a cash out option. All situations are usually subject to a deductible. So in other words, you have to first pay something for the insurance company to step in. So when you buy a policy, what you will get paid in a claim is always not clear, that's for sure. So every claim is subject to you providing a proof of loss. The insurance company will then assess or analyze your declaration to and they have to analyze the declaration and the proof of loss, and they will reserve the right to make their assessments. So they will pay the claim based on the basis of claim settlement stated in your policy. For you, the least desirable settlement option is actual cash value because it offers you the depreciated value of property at the time of loss. Put in simple terms here, let's just break it down even further. In an ACV claim, ACV stands for actual cash value. If you have a 5-year-old TV, you'll get enough money from your claim to buy a 5-year-old TV if you can find one at a garage sale. God forbid if this were a 10-year-old TV, then this is just even crazier here. So what I'm trying to say here is that you have to pay attention to things like the claim settlement and stay away from the actual cash value. I want to talk now about the replacement cost. So you have a 2-step process. So if you notice, I mentioned that you have an ACV, you have replacement cost, and you have cash out option. So the replacement cost insurance is the most common type of a coverage, and it is a fair settlement. However, that doesn't mean you can buy everything new. What you will get during the claims process is the option to provide a list of all the things you had, which should include a make, model, where you bought it and when, with an assigned value. The insurance company will just go and do their own thinking, their own analysis, and they'll come back to you. And they may decide to pay you a partial amount, sometimes half the value. So when you replace the items, they will give you the difference. So what does this really mean? In a 2-step replacement claim, be prepared to pay out half the value of the items you need to replace before you get fully compensated. A lot of people become very frustrated with this. However, this is how insurance contract works. So make sure you understand your wording and ask your insurance agent to explain the specifics to you fully. Also, one thing that's I've seen around, be sure to ask how this applies to items you cannot replace. For example, all the emotional items, the ring the grandma gave you 20 years earlier. You have to ask this to your insurance rep or somebody inside the company. Let's now talk about the 1-step cash out option. So I spoke about the ACV, the actual cash value. I spoke about the replacement cost. Let's talk about the third item here, the 1-step cash out option. This is offered usually by high-end insurers whose premiums often cost more than regular HO5 homeowners policies. The cash out option could save you a lot of time and money in the long run. Not only do these exclusive policies provide higher limits and more special clauses than the standard HO5, no one will chase you down to see if you've replaced items or property. In the 1-step process, you just declare your lost items, get the final tally of how much it will cost you to replace it all. A check is written to your name. Very, very simple. 3 steps. No more questions asked. Insurers offer this coverage only to clients to meet insurance company underwriting criteria. There is typically a minimum requirement for the home value insured though, as well as a credit score review of financial stability. So the gold standards here for those who qualify, this type of policy usually includes liability insurance as well. So how do you really get homeowners insurance? There are a few ways that you can get homeowners insurance. And folks, if you love the content's clarity and quality so far, please consider subscribing to our channel and turn on the notification bell so we can notify you whenever we drop a new show. Also like, share, and comment on this content. If you have a question or you have a comment, I will be very happy to hear from you. And I want to talk now about how to get homeowners insurance. There are a few ways you can get that. The easiest way is to search for quotes for home insurance on the internet. It's always a great idea to read home insurance company reviews to find out if there are companies in your area that have a good reputation for customer service and claims. You can also contact an insurance company directly or work with an agent or an insurance broker to help you find different options. So your state insurance commissioner's office may also be able to provide good resources to find home insurance for you. So if you live in California, for example, you have access to a database of home insurance company information for consumers. So this is it, folks. Let me give you the quick key takeaways here. Home insurance not only protects your building and personal property, but also covers your personal liability. Not all home insurance is the same, so always check your options and policy forms. All risk coverage does not cover all risks, so be sure to ask about your exclusions. If the insurance company were covering everything, they wouldn't be in business. So if you want the best coverage, you may have to add on extra endorsements and insurance riders. So when shopping for the best price, make sure you get all discounts available to you. This is today's recap. I was talking to you folks today about a lot of stuff, and if I had to recap, I spoke about home insurance, the definition, how it works, types of home insurance, what home insurance covers, do you need really home insurance, choosing home insurance that fits your lifestyle and needs, home insurance special limits, how much home insurance costs, how claims get paid, the replacement cost, the one-step cash out option, and I also told you about how to get homeowners insurance. I will see you another time, but until then, remember, stay marvelous.